the central bank and Chairman Jerome Powell delivered unfortunate news for stock market investors. They held interest rates steady and signaled that they're still planning to cut interest rates twice this year, but there was more information in the details that I'll share with you and describe why it's bad news for stock market investors. I'll specifically detail all of the little changes that you may have missed in the bigger headlines that are covered by popular media outlets. I'll share with you the precise details that will deliver that insight that you need as a stock market investor going forward. All right, so what I have here is the table of economic projections of the Federal Reserve Board members and Federal Reserve Bank presidents as of the most latest update on June 18th, 2025. And included in this is the change from their previous forecast from March. And that's the big detail that was unfortunate for stock market investors. Now, it's not really the central bank and Jerome Powell that's making these events. They're just evaluating what's happened to the economy since President Donald Trump announced the tariffs since taking office. That's really the big change since their projections in March and their projections right now in June, right? In April, you had the big announcement in the April 2nd, the Liberation Day, where President Donald Trump announced huge increases in tariffs that the United States is placing on its trading partners. And there's been a lot of speculation on how that's going to impact the US economy, how it's going to impact the stock market, how it's going to impact individuals like you and me. And the central bank has seen the data, the first few months of data from those policies, and they're giving you the data and their projections and their forecast and the updates based on what they're seeing. So let's start with the change in real GDP for 2025. So this is overall economic growth. And in March, the central bank was forecasting the US economy would grow by 1.7% in 2025. That's not an incredible growth rate, but that's right around the stable equilibrium growth rate of the US economy. Not too fast, not too slow for the US economy. It's a more developed economy. It's not going to grow as quickly as the less developed economies. And so a rate of around 1.5% to 2.5% is really the equilibrium growth rate of the US economy. Anywhere in that range is pretty solid.
Click the link below to watch the full video.